Morning, Steve Free in Chicago with the morning grain comments. Markets for the second day have bounced off the recent lows overnight. We're only up a couple of pennies here and there. It's hard to get the momentum going at this time of year with no real major crop problems here in the United States. And the fact that harvest is just down the road. We've got the August crop report that we have to kind of get through. Plus all the uncertainty on trade issues and how not only is that going to affect demand for U.S. beans to China, but could it affect the U.S. economy and even affect the Chinese economy? So all those factors offer some pretty strong overhead resistance. On the support side, U.S. corn prices at the Gulf are the cheapest feed grains in the world, and that should help corn export demand. We also note that it's really hard to find offers out of Brazil for soybeans for sale to China from October forward. So what does the Chinese do October forward if Brazil doesn't really have any beans maybe until, let's say, February to sell from their new crop? Also in the wheat, we continue to hear talk that Europe's dry and their crop is smaller. We're also now starting to get too much rain in parts of Russia, which could affect their production and their quality, and that's maybe offering some support to Russian wheat prices, which is filtering into our prices. So when we look at the funds, yesterday there were buyers of beans, oil, corn, and wheat, sold a little bit of meal, still short 60 beans, long about 50 meal, short almost 100 oil, 100 corn, and long just a little bit of wheat. It's gotten down to maybe a little bit of a technical thing as to whether or not we've made a bottom. Certainly the soybean market's oversold. Right now we're probably having some support at the 850 area in November beans. 867, 870 is your first resistance, and then 874 is our first moving average level of resistance. So in the beans, it's the trade war versus the record global demand for beans and meal. Over in the corn, again, it's the same chart, straight down after the trade war started. There's some talk that maybe the U.S. corn yield isn't quite there because of the quick maturity. You've got support basically at 357, and resistance is that first moving average that comes in at 366. And in the wheat, obviously that chart doesn't look quite as bad as the corn and soybean chart. And for the wheat, we're kind of through some of the moving averages. 490 is support in Chicago September wheat. 513 is resistance. You push over 520 and some people are going to start talking about testing that 550 area on September wheat. Again, it's hard to get people excited about buying wheat with the large world stocks. But if somebody comes in and starts buying wheat because of lower Russian supply, that could help test those higher levels. As always, these are my thoughts and not those of ADM and ADM Investor Services, and have a safe and